Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm here Aldadia. We have with us Kunal Shah, head of Commodities Research, joining in. Kunal, let's start with what's happening with crude. If you have to talk about the past 3 months between June and August, we have seen some bit of consolidation that was happening in terms of Brent as well as WTI. Brent has been trading in that range of around say 37 to $46, whereas WTI has been in that range of 34 to 44. And on MCX, if you go to see, we are in that range of 2,800 to almost around 3,200 to 3,300 levels. Do you think this kind of consolidation or this kind of range is something which is expected to continue? Or on the back of the weakness in demand, we could break the lower end of the range?
Yeah. So what is the reason? Yesterday, a big development happened in US. Mr. Trump announced that he's likely to announce the drilling activity in US again. So in spite of whatever has been going on in the oil industry in terms of the demand side, the demand is remaining very weak because of the COVID in South America, COVID in US, COVID in India, and now there are cases again happening in Europe also. So the demand side is taking a hit, but in spite of that, he's allowing to restart the oil production. He's given permission to produce more oil. So that has led to this kind of fall in crude oil in last 2 days mainly. But I believe that from 3,200 to 2,650, 2,600, it seems little overdone. So you can buy for the upside target of maximum 2,800, 2,820, not more than that. And then you can, from that levels, you can again start to sell crude oil, because right now the worrying part is regarding the demand. So the way the number of cases are shooting up in India itself, in South America. So now India is likely to be on number two. US is still, US also, the numbers are not going down significantly, and there are reports of the fresh coronavirus cases in Europe, in South Korea, in other countries. So I think 2,800 maximum upside is what I see. And post that, I would recommend to go again short in crude oil. 2,820 is good levels to again short it.
Right. So overall, if you have to look at a couple of data points from here on as well, see, we have OPEC Plus, which is currently cutting output by almost around 7.7 million barrels per day up till December to support prices. Apart from that, again, if you talk about US as well, it's one of the major markets with regards to oil as well as economic data. That is also not depicting a rosy picture either, because if you talk about the National Employment Report, their private payrolls increased, in the month of August, and the July numbers were also increased to show hiring by up to almost 212,000 jobs. With this, the US gasoline demand fell last week to almost 8.78 million barrels per day from 9.16 million barrels per week earlier. What is all of this data point actually indicating to you if you have to take the next 2 to 3 months perspective, Kunal?
Yeah. So all of these is clearly pointing towards one signal, and that is, I think we are still talking on oil only, right?
Correct.
Yeah. So that thing is very clear that the demand side is going to remain weak. So now, whatever, see, you have to understand that 7.5 million barrels of production cut
Hmm.
is already going on, and in spite of that, crude oil prices are going down. This is a sign of weakness. This is not a sign of strength.
Correct.
So what is happening in last 3 days is, irrespective of the liquidity, all asset class which are having a bearish or which are overvalued, they all are correcting. So may it be metals, may it be equities. So wherever, so may it be Nasdaq, the tech stocks, there was a major buying going on in tech stocks in US. But from last three trading session, Monday was off in US, but from last
Correct.
three trading session, Friday, yesterday, today, So every day we saw that there was a major correction in tech stocks. Why? Because the valuation were too stretched. So same way crude oil was trading at $45 with demand destruction taking place, and in spite of OPEC cutting so much production, then too the markets is showing glut. So I
Right.
think the fundamentals is clearly being reflected right now, and believe me, in near term we have to remain little cautious, sell the rallies. We require major trigger for crude to go up. So vaccine is something which can really help it, but uh, beyond that, I don't see any major trigger for crude to really shoot up sharply.
Right. And with this, if you talk about gold and silver as well, very interestingly, you are seeing that downtick that has continued. However, there is some bit of support at, last time also you mentioned at 50,500 levels, which gold is picking up right now. Now, clearly, if you go to see, interestingly, I was reading a fact on silver where MCX came out and said that they witnessed an all-time record delivery in silver contracts. So, what is this indicating? And what should the strategy be then for silver and gold?
There are two questions. I'll address them one after another. I, like you rightly pointed out, I was always saying that 50,500 should hold for gold and 66,500 should hold for silver. Below that, you can see another capitulation can take place. So interestingly, yesterday the dollar index strengthened from 93 to 93.50, and gold initially corrected, but in the evening session it shot up sharply in spite of the strong dollar. So what this is saying is $19-20 on COMEX. It remains a level which is very difficult to defend, and people are defending that level from 3 times. I have seen from 50,500 gold is again shot up. So that will remain support for time being. Any fall below 50,500 on the hourly basis, I think that will again lead to another fall in gold prices. But right now, the dollar index is trending. Today also, it is up by 0.25%. And so initially, you can see some selling, but I am having little contra view looking at the way the US China, the China Taiwan tensions, India China tensions heating up. So buy the dips in gold rather than going short right now immediately. So around 50,950, I will recommend to go long in gold. 51,350 to 400 are the levels where you are recommended to book your profits. Similarly, when I say long for gold, similarly for silver, I would refer to a second point, the record delivery. So why that record delivery took place in India? Because there was a huge difference between the spot silver and the future silver. So if today I'm having a silver bar at my home, and if I want to go to sell that silver bar, the difference was as high as 7,000, 8,000, at some places 12,000 rupees.
Hmm.
So that bar, I'm not. So online, I'm seeing the price is 67,300, and if I go in the market to sell it, I will get 59,000 or perhaps 60,000, because the physical demand in India, number one, very weak. So whoever wants to buy silver, now what they did, they bought delivery from the exchange. So in case if silver prices goes up to 85,000, 80,000, then they will sell on the exchange platform itself. So they will get a proper appreciation on their silver what they are buying. So in silver there is a disparity. If you go to market and if you buy silver, you will get at a higher price, and if you go to sell, you will have to sell at much lower price than what you are buying. So the buyer seller quote is absolutely vague. So that's why people, the industrial body, the hedging community, everyone who requires silver for the physical exchange or for the investment, these people have bought the delivery. And that doesn't mean that silver prices are going to go up. It doesn't mean like that, but it is a very good sign. So even our clients, who have exposure in gold and they want to they want to go long in silver, we can recommend, our RMs can recommend, and we can take delivery of silver physically.
Mhm.
So that will lie in the demat. So I think that is one of the better way to invest in silver.
Right. And then with all of this, what's the sense that you pick up in terms of base metals? I mean, the US China trade war is something which is ongoing. Interestingly, we've seen some bit of downtick that has continued in terms of where copper goes. But overall, if you see in terms of especially where copper is concerned, now it's pretty much in tandem the way it's reacting. Dollar strength is something which is keeping China based metals on a downtick. However, we did see some gains that did come in with regards to where London copper was concerned. Anything that you would want to explain on that front?
Yeah. So metals, what is happening is now U.S. economy is suffering, and now China, if the this trade dispute is worsening, so now it is spreading to the Chinese IT sector. So I think we are going to see if this doesn't get resolved, U.S.-China spat, then I think even Chinese economy is going to suffer. So China cannot remain. Entire world is suffering, and it cannot be the case. Then only one country which remains outlier. That doesn't happen. This is a global economy. So if US suffers, if Europe suffers, the China will also suffer too. So my sense is that base metals sell the rallies is a good strategy right now. Uh, we were continuously recommending long, and we saw upside that was liquidity driven, and now this trade spat, I think that can lead to some more fall. So copper 523, 524, I will recommend to go short. uh, Stop loss for intraday 526.90, 527, and
Hmm.
target should be 518, and below that 515. So yesterday in our group at 526.27, we recommend to aggressively short copper. I continue with that view, and I believe that any 1 or 2 rupees upside. Today morning it opened at 520, 320.
Hmm.
So any upside of 2 rupees, 3 rupees, go short in it. I'm expecting copper to go down further.
Right. So there could be pressure that could be building in with regards to where copper is concerned. And overall, the volatility is expected to be here. But I mean, I
Yeah.
don't think that anyone has any questions right now. So thank you, Kunal, so much for joining in. We will
Yeah,
be back with,
I
yes.
will. I would like to talk on Indian rupee because there are people who are
In fact,
basically.
talking on the rupee as well, Kunal, in fact, a lot of questions right now that have been coming up is that do we see the dollar index that could come down to levels of, say, 80, 85? Do you think the near term possibility is there on that front? And if that happens, on the back of which, how do you see the rupee reacting then?
Yeah, so if the dollar index, actually right now what is happening is the dollar index is really shooting up. So we've seen pound getting hammered, euro getting hammered, and
Correct.
dollar index is moving up not because of US economy is strong, because market is sensing risk aversion. So there
Hmm.
is a risk aversion. So generally what happens is if I'm a hedge fund manager or managing a big fund, so I go short in dollars, and I invest that money in emerging market. I invest that money in commodity. I invest that money in other various asset class. So when the various asset class where I have allocated my money, I've allocated my fund, if that starts to go down, I would definitely try to unwind my trade on the dollar, because if dollar strengthens by 3%, 4%, then my loss on my investment will be obviously of the same tune of what the dollar loss I'm going to face. So I will lose immediately 3%, 4% of my investment because of the dollar. So whenever dollar starts strengthening, all the money managers, they try to square off their short positions on the dollar, and they square off their long position in the other asset class. So because of that, rupee will hold on to the current levels. Perhaps it can go long. You can go long for the upside target of 73, 75, 80. But tomorrow in India, there is a major verdict which is expected to come from the Supreme Court on the interest rate waiver case. So that is going to have a lot of impact on the Indian rupee. So, but what is broadly going to happen if the dollar index moves up by another 1%, then obviously rupee is going to weaken to the tune of 73.80 to 74.
Right. So that's with regards to where the Indian rupee goes, because a lot in terms of the commodities market will be dependent on the way the rupee functions from here on as well. But thank you, Kunal, so much for joining in. We will be back with him on Friday at 3:30. Thank you so much.